talk about oil that is trading near that $63 per barrel mark in the global market. Remember, it is up 0.5% in trade today and it is gaining for the second consecutive day. Remember, investors continue to weigh any kind of ceasefire or peace talks which continue to remain underway between Russia and Ukraine. For now, there is no concrete output. US President Donald Trump has said that we need to wait and watch of what the final outcome could be. But today, Brent crude is trading with gains of 0.5% to trade near that $63 per barrel mark. Shifting focus to the precious metals market then, and gold is hovering near that $4,180 per ounce mark, with silver being at a fresh record high yet again to trade near $57 per barrel mark. Remember, gold today is falling for the fourth consecutive day today, but silver, as I mentioned, is at a fresh record high. US payrolls data came in yesterday, which reinforces rate cut bets. Remember, Federal Reserve will be meeting next week, and most analysts are penciling in a 25 basis point rate cut in the Federal Reserve outcome that is expected over the next few days. So all eyes will be on any kind of commentary that comes in from Federal Reserve officials and its impact on the Federal Reserve interest rate trajectory going forward. But to understand what the outlook is going forward when it comes to precious metals as well as copper and aluminium, which continue to trade at multi-high levels, we now have Mr. Anindya Banerjee, Head Commodity and Currency at Kotak Securities, now joining us. Mr. Banerjee, afternoon, and thank you so much for joining us. Before we talk about precious metals today, let's talk about copper, because it has now crossed that $11,400 per ton mark in the global market. This primarily is on account of supply crunch. But do you believe that this supply crunch will last longer, because the gestation period to set up mining activity for any metal is very long? So do you expect the supply crunch to last at least for the next 3 to 4 odd years?
A very good afternoon and thank you for having me. Yes, in copper, actually, a couple of themes are playing out. I would say those are themes. Of course, one is the supply disruption, started with a Gasberg mine. And it is expected that we will not see much of an improvement in the supply till mid of next year. Along with that, we have the whole electrification, green energy, and the AI theme, AI data center theme, which is also playing out through copper, because we need large amounts of copper in each of these sectors and industries. So a combination of these two, plus we have a sort of a weaker dollar. Now, the weaker dollar is more linked with the dovishness of the Fed. The upcoming Fed meeting will throw more light on that. If the Fed is even more dovish, we can see the copper prices head above $12,000, which means on MCX, we would see the levels of 1100 plus, because 1100 is a sort of a ceiling on prices, like $12,000 is a ceiling on the LME. So yes, till the Fed meeting, we could see some consolidation because we had a very sharp run up, and the next move can happen after Fed.
Okay, so the next move can happen after Fed, and the first target that you've given on copper is $12,000 per ton. And what is your view when it comes to aluminium? Because that too is trading at a 3-year high level, and several factors continue to aid all of these industrial metals. But in particular, when it comes to aluminium, what will your first target price be?
See, if I take MCX as the price, in fact, this bullishness is playing out in all metals of all categories, because see, apart from the individual demand and supply factors, there are two structural factors which are playing out. One, because of de-dollarization, what we are seeing is now countries are not satisfied just owning the dollar, which used to give you access to anything and everything at a much in a much easier way over the last 50 years. Now that's not enough. Every country needs to have to build their own strategic reserves for the critical minerals, including US. So that is one factor. Because of the inventory stocking, the demand has increased. Second, sort of dollar is debasing against something which is finite, which is the hard metals. So these are two structural factors which are impacting the entire hard metal pack. Now, coming to aluminium and zinc, aluminium, if I take MCX as a reference price, we expect from the current levels of 278 it to gradually inch towards the level of 300. But aluminium is a slow moving commodity, unlike copper. So it will take its own sweet time, a few weeks or a month, to head towards the 300 mark.
Okay, so that's your outlook when it comes to aluminium, but China continues to remain one factor which continues to weigh heavy on all of these industrial metals, right? And over the weekend, we had some data that came in from China where macroeconomic data continues to remain very weak, whether it's the manufacturing PMI or the non-manufacturing PMI. Do you believe Chinese government will try to put in some more stimulus to stimulate its economy, or perhaps that is likely to be stalled at least in the short term?
No, we think that before the Chinese New Year, which is in Feb of next year, the Chinese government would look at stimulating, because the global economic situation is not very rosy. If you look at even the US, over there we have a K-shaped economy. The consumer economy is sinking. Yesterday we had the jobs report, which seems to confirm that. Now, it's very important for China, who is also facing a trade war to with US, that to basically come out with more stimulative measures. But right now, as I said, the base metals are playing more as a currency than as a commodity, and wherever there is an individual story of disruption, be it in copper or sometimes in zinc, sometimes in aluminium, that is having an accentuated impact. So right now, I think it is that macro theme of dovishness of the Fed, weakness of the dollar, which can continue to drive copper and even aluminium uh, towards fresh 52-week highs.
Okay, so weak dollar will continue to drive copper and aluminium. But what is your thoughts when it comes to the ferrous basket, both iron ore and steel? There was an article a few days ago which suggested that China has now asked its iron ore mills to increase and ramp up production to ensure that imports are reduced. Your thoughts on this and where steel demand in China is headed in the short term?
We don't really track the ferrous basket actively, so I wouldn't be in a position to comment on that now.
Okay, so that's as far as iron ore is concerned. I understand that point. And within industrial metals, other than aluminium and copper, any other metal that you're bullish on?
Zinc is another metal which is currently around 308, and it has been in a fantastic run, because there too we have the supply disruption issues, and that can play out currently from 308 levels. Over the next 1 month, we can see levels of 320, 322 on the MCX. So that is another metal which we are on which we are quite positive.
Okay, so positive on zinc, copper, and aluminium, all of these three metals within the industrial basket. One last question before I let you go on the precious metals side, then. On silver, which is at a record high, we are seeing some bit of consolidation when it comes to gold. What will your thought be, and which will that precious metal be that you're most bullish on?
See, silver is of we have been over the last 1 year, we have been more bullish on silver than gold, because silver is both industrial as well as gold. It's kind of like a combination of copper and gold. So, as I said, the very same things which are impacting the industrial metals. Plus, if you look at the silver market, it has been in a deficit for the last 4 to 5 years, and that deficit is expected to continue. So silver has a very compelling case. If you're looking at what is happening across COMEX, LBMA, Shanghai, and the Indian imports, there is a definitely a physical metal squeeze which is happening. So it is quite likely that over the next 6 to 9 months, we could see silver prices rise significantly. And won't be surprised if silver heads to a 70, $75 over the medium term.
Okay, 70, $75. That's the target coming in on silver, and that is likely to outperform going forward. Mr. Banerjee, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is, not only for the precious metals basket, but for other industrial metals as well. Thanks so much for joining us today.
Thank you.
Shifting focus to our next segment, Did You Know? And from the smartphone in your pocket to the electric car on the road, semiconductors are the silent force behind modern life. At the heart of these micro wonders lies silicon. But that's just the beginning. Germanium, phosphorus, boron, indium phosphide, and gallium. These are some of the other essential elements that go into the making of chips, that power our devices, drive innovation, and fuel our future. Without them, there would be no rockets, no laptops, no high-speed connectivity. Simply put, these raw materials are the backbone of the information age, and as demand for tech grows, the global race to secure them is only set to rise. That's all the time we have on this edition of Commodity Central, but don't go anywhere. Newsroom coming up next.